When war breaks out in the Middle East, oil just doesn't rise, it erupts. And when oil jumps, the stock market usually panics, but some stocks win really big. Now, history shows us these conflicts often light a fire under energy prices. And right now, with tensions between Iran and Israel heating up, the oil play setup is back on the table.
One of the world's biggest oil plays right at our doorstep here on the ASX. That's so exciting now. Very low PE ratio, high dividend yield, good EPS. I mean, everything is pointing to a buy right now on this stock.
So strap in, because today we're breaking down three major ASX oil stocks that could surge as panic hits the market. And as always, we'll show you the key levels and strategies so you can read these stocks like a pro. Welcome to Wealth Within's Hot Stock Tips. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. Joining me is Wealth Within analyst Pedro Banales, and I'm senior analyst Philip Tortevsky. So let's get straight into it. Now, Pedro, welcome. First off, I just wanted to quickly discuss the situation out there, the war in the Middle East, because that is playing into this oil scenario right now. And we're going to bring up three amazing oil players on the ASX because, as I say, this playbook is one that has come out in the past and is on the table right now. But in terms of the situation, I mean, obviously oil has seen a spike already. Are you anticipating further volatility, further upside in oil, and a market panic or crash?
Absolutely. So oil is mainly driven by supply and demand, as everybody would know. But there's also another factor, and that's geopolitical risk. And that factor had been taken away for the last, say 6 months. Where the price was trading mainly on supply and demand, and it was mainly a China story, that the falling demand from China. But now that factor is back, the geopolitical risk, and it was actually further escalated when energy infrastructure has been attacked now on both sides, which that in itself, that's what the market is really worried about, the oil market. And we've had that happen. We've seen oil spike 7% in one day, not a usual type of move. So definitely a lot of volatility to come. It's still an unraveling story, a lot of uncertainty, which we know that the market does not like, but great opportunity on the energy stocks.
Well, I'm glad you said that, because there is one sector that really does perform quite well. Energy, you just mentioned, but especially oil. And so to that point, let's bring up our first stock, which is Santos. Now, they came out with some major takeover news today, Pedro. Obviously, on the screen here is the ASX release, an XRG consortium non-binding indicative proposal to acquire Santos. Now, this is from a group coming out of the Abu Dhabi National Oil Company, and the takeover proposal was at around $5.76 US, which equates to $8.89 per Santos share. Now, if we get into the chart and have a look of Santos, I want to bring that up really quickly right now to show you that, I mean, we're on the monthly chart here first. Obviously, today's share price is rising, and we're currently up about 15% today. We're trading at around $8. So there will be quite a decent gap on Santos. And I mean, to me, the real question is, right now, rather than hypothesize what if, will the markets go down? Will oil rise? Is there a trading opportunity for Santos right now? And really, it boils down to where price is relative to the next, I guess, opportunity. And looking at this rectangle box that I've applied in black at around 880, 870, 890, to me, this is a huge level of resistance right now for the stock. And given we're just under it at $8, I'm not so sure on today's prices that there is a play on Santos in the, I guess, short to medium term. And really the safe option would be if the price breaks above $9, then potentially there's another nice long medium term opportunity up to that $12.94 level, where I see the next major level of resistance, because it's really bounced off huge support at $5.40. I mean, it's so evident how important this level has been. It's been resistance back in 87, 88, 89, and then support back in the 2000s, most recently in June 2025. So what am I saying here? Definitely on the news, there's going to be a lot of hype around Santos right now. But in terms of getting that best buying price, you're walking straight into resistance. That's my opinion. So be very careful. Your thoughts, Pedro?
Absolutely, Phil. Now, price has just gone to the upper range of where Santos has been trading now for multiple years. And let's go back to the chart because I wanted to highlight, what you've outlined there on that resistance. That is definitely going to be the level to watch for around that $9 because we have seen price bounce around since 2018 from that bottom range of around that $5 to that $9. Now, I would say that if price then gets rejected from around that $8, right now we are seeing price trading at $8. It's a bit of a less of what the offer is at $8.80, which is interesting. But if it does bounce and find some support, maybe around these levels, around that $6 level, and doesn't quite reach that $5, I think that there you might find a little bit of a better opportunity because you've got that buffer to protect you until that next resistance level. You've got around that 20%. But the next best thing would be, as you said, wait until it trades above that $9, and then you've got a massive 43% upside. Now, finally, I just want to say that this is a huge deal for Australia. A consortium in Abu Dhabi wanting to take over our biggest, gas play. I'm not sure how that's going to fly with the Australian government, and I would actually hope that the government does step in and offer some type of a regulation around this because I don't think that it's the best idea to have a foreign entity own Santos at the moment.
Yeah, and I mean, look, right now we also have to address that it is a proposal. It's not a done deal. So, you will expect more volatility. The deal may go through, may not also. And so right now it's whether you even want to get involved in a stock like this, given where current price is, if 880 is the cap at the takeover price, then what happens after, once the takeover happens, what are you looking at? A whole new scenario. So be very cautious and very careful of what you're walking into with Santos, because no doubt, I guess the news will be surrounding that very much so today. But, going back to that scenario in terms of the oil and markets, Pedro, because it's something we skipped on quite briefly earlier, but there is this real correlation. It's happened throughout history where Middle Eastern conflict has caused the oil price to rise and also caused stock markets to fall. Now we've got the ASX market up 8 weeks, approaching the all-time high. That's well overdue for a potential correction. We have news and a setup right now which could be the onset of that. Obviously, the US this morning last night over the weekend was down quite a bit. And maybe now we're starting to see that return. Obviously, on the sector front, we saw the, defensive type sectors, utilities, consumer discretionary or consumer staples rise this week along with energy. But the growth ones like IT and materials, those sectors struggled quite a bit. So maybe there is that rotation again, moving back into the defensive. Gold is up once more on the back of this news, which is not surprising. So I guess what I'm asking, how important is this Iran? Being Iran is a huge player in the oil space, and given the way they control certain infrastructure, could this be a much deeper pullback on the All Ords and world markets and a much stronger rise for oil moving forward, given the player right now that is at the center of it?
It definitely could be, because adding to the risk of oil supply is also the Strait of Hormuz, which Iran controls heavily, being shut off. They could use that possibly as a strategic play and actually stop 60% of world's shipping. I mean, 20% of oil goes through there, let alone all the imports from Asia to Europe. So that could be a flashpoint that could definitely affect the market. So we'll be watching that very closely. Australia, certain sectors are going to thrive regardless, like the energy sector. Our real estate sector is doing really good as well. But any import or export, reliant sectors or industries could actually, be in trouble.
Yeah. All right. Now let's get back to opportunities, because that's what it's all about here. Now we've got Woodside Energy next up, ASX code WDS. So on the screen right now is the monthly chart. And again, another huge oil player in this space. What I like about Woodside right now, and I know you've been talking about this one for a little while, is that it's doing something very different to what we've seen since July 2023. And what do I mean by that? If we look at the nature of these rises, these spikes, since this whole downtrend in August, July 23, you measure the runs up, and in terms of volatility, what we're currently seeing coming out of this low in June is the strongest in terms of upside volatility we've seen for the best part of a year and a half. Combine that with a bounce at significant support, which you can see has touched at around $18 on multiple occasions back in 2021 and also 2020. Big volatility by upside. We've also come back to a long-term momentum line. In fact, the longest term gradient of rise, which you potentially could have marked out after 1999 and seen it find a base in 03, seen it find support in 2020, now again in 25. A lot of things are lining up from a price percentage point of view, and buyers are really getting involved right here for Woodside Energy. Now, I know a month or a week doesn't make a trend or a reversal, but we could very well be seeing the onset of a reversal here for Woodside Energy, which is such an exciting part, given how big this stock is and how much upside it can provide when it gets going. So to add on top of that, we've got this momentum line that we're finally breaking through and closing above. The only caution I would add on this stock is if you're looking for opportunity right now, which no doubt you are, $27 is a bit of a short to medium term resistance, as evidenced by these levels through here. I mean, you could even tie that up a little bit higher to around between 27 and 28. But apart from that, I think the most major next level or next hurdle for Woodside is between $34 and $38, which makes a very decent opportunity from current price levels up to there. So they're my thoughts on Woodside. It might have just turned the corner. What do you think?
Oh yeah, huge upside opportunity in Woodside, one of the world's biggest oil plays, right at our doorstep here on the ASX. That's so exciting. Now, onto the chart, I wanted to highlight what you've mentioned earlier about this reversal that we've had to the upside. Now, yes, we've got beautiful upside here of 65% that we had back here in COVID. We've only got around that 40% currently. So we might have a little bit more to run, possibly up to that $28, like you mentioned. I would say the biggest run possibly to that $30 before we see a pullback. So it's not late for a short to medium term play on this one. Long term, we could see a possible retest of this low. So something along the lines of, going up to that level and then maybe coming down. If it finds some support around that $24, which is a significant level, and then trades back up, that's going to be the safer play if you're more of a conservative trader. But everything points to upside on Woodside. It's got a very low PE ratio, high dividend yield, good EPS. I mean, everything is pointing to a buy right now on this stock. So this one, I think, is the pick of the bunch.
Yeah, and I would even add, if we go back to that chart and have a look, in terms of your latest point, and I totally agree in the fact that, when you're thinking potentially a safer move is a move up, but then also a pullback, and then for the market, if we apply one of these arrows as you had them, potentially a move, something along the lines of this, and then for it to go. That does generally imply a safer type move, as you saw throughout these periods. But if we're really on the onset of a new bull market, let's not neglect the fact that we could literally just bounce really strongly on a monthly basis through here, and also like we saw in 2003. And for those traders that are potentially wanting for that safer confirmation, they might miss the party. So it's really up to your strategy and how you apply it on this stock, really, so that you can, enjoy the fruits of its labor if it does make a big move without giving you one of those tests, as you're saying. But let's now move on to the next stock, because this is another huge one. We've got Beach Energy, BPT ASX code. So on the screen there now is Beach Energy. And I mean, Pedro, I'll go on the monthly chart here for this one, because what's quite interesting for me with Beach Energy, it's had this huge run back in the 80s, had this capitulation, and then really found, can I say, fair value at around $1.50. I mean, really the price has hovered thereabouts since 2006, maybe back in the 90s to 2016, it was around 80 odd cents. But if you watch what's happened, every time it gravitates below or gravitates above $1.50, it's generally come back to that level. And what we're seeing recently is one of those pure accumulation type moves where price is congesting literally around that level. So given that is the scenario right now with Beach Energy, I would say this is a range-bound market. So for traders looking to play a particular type of style, you've got to accept and I guess respect that it is range-bound. So any moves from around $1.04 to $1.90 would be the safe way to look for potential with this stock. But as you know, the longer this market compresses sideways, at some point it's going to break out. And if we get a break above $2 or $1.90 through here, all of this compression is going to turn into a really nice expansion. And then that's when you might see Beach Petroleum start moving into this really strong growth phase, approaching those $3 and some. But right now you've got to assume the safe play. And whilst it's trading sideways, I would be looking for short-term opportunities here to play between $1 and $1.90. Let it prove itself above $1.90, $2. Then we can think bigger picture or more trending type environments like 2004 and also 91. Thoughts?
Yeah, this one is for maybe a little bit more experienced traders, but it represents huge upside opportunity. And this is at where Santos was just a couple of months back. So we could quite possibly get a takeover bid for this one as well. Let's not forget that first we had Woodside with the extension of the project in Western Australia, and we did say there's going to be a new regulation type environment for gas in Australia, and now we're seeing Santos, have a takeover bid. This one is the one to watch right now because it's at critical levels. I love this range that you've outlined here, $1.90 and $1. And it's trading at the bottom of that range. And I agree that that fair value of $1.60 is where it usually trades around. So if we have a look at the upside only to that range, that's 50% just on that range. Nice little short to medium term move. And if it does break above those levels, then we're looking at a possible further 50% upside. So if you're more the medium to longer term player, you could make 100% of your profits, just on this stock. If we expand that out, then, you only have to look at those historical levels back here in 1985 to realize where this stock could go. So this one is the one to watch right now. We've seen Santos move, we've seen Woodside move, and we know that the big boys usually move first, and then the little fellas follow suit. So keep an eye on this one.
Yeah, and I've just added a few more levels on my chart, if we can go back there to show you that point that we just highlighted about, markets that accumulate sideways and then break out. It's something that happens so often on stocks. And, just by looking at this period back in 99 to 2004, you can see that the precursor to this huge up move was this sideways type accumulation, very similar to what we're seeing now. Again, I can say the same thing for this period back in, if my mouse will let me, 1993. The precursor to this up move was this sideways period, very much like what we're seeing now on a much higher gradient and longer time frame. So that's important to keep in mind. Now, just quickly, I did want to add, a lot of these techniques that you do see from a technical perspective are in this book, How to Beat the Managed Funds by 20%. It is free. You just have to pay the shipping. It's a fantastic introduction to technical analysis and portfolio construction on the ASX. I get that. It is free, as I mentioned. But if you want more hot stock picks, check out our video, Lithium About to Rally, 3 ASX Stocks to Buy.